What's up, everyone? I'm going to try to get back to making these quick videos about my new plays, and today I'm looking at ticker symbol BBIG. Now, I wasn't involved in the first squeeze in August that sent this stock from $2 to $12. And one thing that made me shy away the first time was, I was a little late to the party, and then it got pinned to max pain. When that happens, usually that's my time to exit. So I've been keeping an eye on this. It's been on my watch list for the past 4 months, and I noticed this week it popped back above max pain. Max pain right now is currently at $3. Today, BBIG closed at 324. I think yesterday it might have hit as high as about 360 ish. So it's trading above there. Typically, I'd love to see this get above 350 and hold there before entering to be sure that it's not getting pinned down for options expiration at the end of the week. But I've also noticed an uptick in social sentiment that makes me feel like this could start moving pretty quick. So, in terms of a short squeeze, let's pull up Ortex. So as you can see here, Ortex is reporting a 21%. Where we at? Right down here, 21% short interest, which isn't crazy, but it's still a decent number. The big thing here is the utilization. Right now, it's at 100%, which is great. Cost to borrow started the day at 57%, which is a pretty decent increase week over week from 26%. And on top of that, the average on the day today was 359, which is pretty crazy. Okay. These are definitely numbers that can cause a squeeze if the stock sees an uptick in volume. The other interesting thing that catches my attention on this play specifically is the options chain. And I'm going to pull that up right now. As you can see here, the stock's been seeing a ton of bullish flow. 89% call volume today, 92% yesterday, 91, 91, 90. So it's been seeing a lot of bullish flow over the last 2 weeks. This is reported by Unusual Whales. And then if we come over here and look at the actual options chain, where are we at? For this week, the weekly expiration, you are seeing a little bit of calls outweighing puts. It's not bad. As we go through the weeklies, we kind of see that it's kind of the same. Once you get past 350, even $3 for next week, keep on going here. More of the same. But what really catches my attention is this monthly expiration of January 21st. As we look into here, you could start seeing 25,000 calls outweighing 4,000 puts, 29 versus 6. 67 versus 7 at the $5 strike. Over here, we got 71,000 calls versus 4,000 puts. So, and it continues on. As we go through the chain, there's also some other higher expiration dates. I think out here in April, I was looking at it, goes up to 15 and even further as we go down. So, the open interest that we see here for January is enough that I think could kick off a gamma squeeze if we can get above that. Let's say the stock continues on its trend, gets above 4, maybe holds above 450 sometime between now and January 21st. And all of a sudden, now you start putting a little bit more pressure on market makers that need to hedge those calls moving into options expiration, which could kick off a gamma squeeze that I think has the potential to maybe push this thing through the January options chain. Now, you mix that with the short interest we just talked about, the cost to borrow, and we have a nice recipe building up. Now, the IV is pretty high right now, so if I was going to play options here, I'd go for something more attainable and something with enough premium on it to be able to exit if the trade goes against me. Right now, I'm targeting the February $4 strikes. That gives me, past the gamma squeeze potential, that date of January 21st. So if it doesn't pan out, I still have time to exit. And I'd still be sitting right there with a little bit of time premium on it to get out of there, not too far away from the price. If I was going to go sooner, I'd probably look at the January 21st chain. I definitely want to be involved in that because these weeklies, who knows what's going to happen with them, and the most open interest is in January. Now, it could happen before then, or it could not happen at all. But if I was going to go with the January 21st chain, I'd probably be looking at the 350 strikes. As always, with any of these plays, You need to practice risk management. Don't YOLO everything in. It's hard to determine which of these plays will work out and which won't. I'll be looking to cut my losses here if this drops below 290. Okay, so if all of a sudden we see this thing reverse, fall below max pain, dip below 290, I'll probably be looking to exit. I'm going to be playing options only here, and I'll look to enter back again if I get that confirmation that it's able to hold above max pain again. Also, I'll be taking profits on the way up to make sure I don't get stuck holding the bag. Okay, so don't be afraid if you're playing options. Make sure you shave a little bit off on the way up. Taking profits is always good. Can't emphasize that enough. As always, good luck in the markets. Hopefully, I'll have some other videos coming soon on some different tickers, or maybe even an update on BBIG in the future. Have a Merry Christmas. Good luck in the markets.